Okay, so what I want to do now is I want to talk to you about growth stocks. So what I'm going to do is just go back to this filter that we set up in the beginning part of the presentation and just make a couple of changes to it. And you can see that the main criterion that we look at, they're consistent whether you're looking at income stocks or growth stocks. There's just a couple of small changes that we'll make, and we'll scroll down the bottom here. First of all, obviously we're not looking at dividend yield, so we can get rid of that. And then what we are looking for is stocks with good growth prospects. So instead of saying more than 0, we'll crank that up to more than, say, 8. Okay, so I can save that, and you can see that I've got 22 stocks now that are showing up in that list. Again, represented by these balls on the aerial screen, but this screen is focusing on dividend yield. Now, we're not so concerned with dividend yield this time, so I'll go to this table view. And you can see here in the table view that you've got a whole range of different metrics that you can compare these stocks based on. And because we're focusing on growth, I'll click on the growth metric and forecast change in intrinsic value, and you can see them now listed from highest to lowest change in forecast value. So the first stock there is OCL, or Objective Corporation. Now I'll skip over that one, and the reason is simple. There's only one analyst covering that stock, so my degree of confidence around those forecasts is not as high as it might otherwise be. But what I'll do, I'll have a bit of a look at this second stock, which is Sirtex Medical Limited, and step you through this business much the same as we did with Nick Scali, except at a bit of a faster pace due to time. Okay, so I'll start on the summary screen, and you can see here there's only bullish points, there's no bearish, so that's a good sign. The bullish points are showing us that the profits are good and the cash flow is also good, and that's leading into an A1 score, which of course is something that we like to see. If we go and look at the Skaffold score over time, you can see over the last 5 years it's been pretty consistent. A little dip in 2013, but basically a strong performing stock. Okay, so second question, is the business profitable? Now, Mark has talked to us about trend in ROE, and indeed this blue line is showing us the trend in ROE, and you can see that it's 22% and trending up, 24, 25, 27%. So that's something that you're looking for. That's an attractive number. Again, talking about trend, we look at earnings per share, and you can see there that the earnings per share are also trending up, and indeed quite strongly. So again, attractive stuff. Is the debt manageable? We can find that on the cash flow screen. I won't bother. There is no debt with this stock, so obviously it's well and truly manageable. Cash flow. Um, Good, strong cash flow. Now you can see that that blue line there, which is just a little hard to see, but give me a second. That blue line is nice and high, just focusing on the last 5 years. But the green line is again pretty consistent, and you know it's going to be because we've got this tick up here for the long-term funding surplus. The only thing you would note there is a bit of a dip in 2000 and I think that's 13 or 12, sorry. So when I see something like that, I just go away and do a little bit of investigation. You can see if you look at the table down below, that's the first place I look, and there's this outflow of $45 million in terms of cash flow from investing activities. Now, what that is I went and looked at the annual report, and it's simply that they bought some more short-term securities. So nothing to be concerned about there. Okay, so the key question we're looking at growth stocks is the business growing, and will the value of the business increase? And you can see there that the business is growing strongly. The intrinsic value is forecast to increase, and there's quite a decent range on that intrinsic value. Now, what that means is there is good prospect that the business will grow, but there's also a reasonable degree of risk around the outlook for this particular business. Now, Sirtex is a business that's involved in, it's a biotech business, and it's involved in looking for solutions to treat liver cancer. Now, most biotech businesses are very much hinged to their clinical trials, and that is certainly the case with Sirtex. They are undergoing some key trials, some of their, one in particular of their products at the moment, and they're expecting results from those trials in Q1 of next year. Now, depending on the outcome of those trials, will have a major impact on the profitability going forward of this business. And depending on how positive you are on the likely outcome of that trial, that'll determine whether you're more or less bullish on the future valuations. So with a business like this, the questions are, how much risk is associated with the outcome of that trial? And then the second question is, how much are you prepared to pay for this potential growth? At the moment, the stock's trading on a PE in the high 30s, and it's trading at an intrinsic value that's well above its estimate of intrinsic value. So the upside potential is high, but so are the risks. And the risks are twofold. There's a risk around, will the clinical trials be successful or not? And then the other risk is, does the projected growth sufficiently compensate you for the current price? So these are the questions that each individual has to determine for themselves, really. So I hope that presentation's been enjoyable and useful for you. I hope you've gained a better understanding of the key things that we look for. And as you can see, there are different approaches to how you want to invest, but some of the fundamental underlying principles that you want to look for are pretty consistent no matter what approach it is you're using. Marcus Padley went through an approach which was a little bit different to the approach I've talked about, but again, the underlying fundamentals are very similar, and hence, of course, we're very much aligned in our philosophies. So I hope you could see how we use Skaffold as a tool to come up with a short list of stocks, and then use the functionality within Skaffold to dig into those stocks and really understand them. So on that, I'll pass back to Jeremy. Thanks, Jeremy.